This material is intended solely for professional investors and financial advisors and is not suitable for distribution to retail clients. The material is not intended to provide and should not be relied on for investment advice. We give no warranty as to the accuracy, reliability or completeness of the information herein, and we will not accept any liability for errors or omissions in this material or for any resulting loss or damage suffered by the recipient of this material or any other person.
Hello and welcome back to the Daymer Bay Capital podcast. My name is Alexander Renwick and I co-founded Daymer back in 2018 with my business partners Charlie Bailey and Paul Cunningham. We are a London-based third-party marketer and our strategy is to partner with a small number of specialist fund management groups and bring them to professional fund selectors and asset allocators. We are very privileged to have been partnered with Mirae Asset Global Investments for 3 years now, and to represent a select number of their UCITS funds across the United Kingdom, the Channel Islands, and the Republic of Ireland. Today, I'll be joined by Sol An, who is co-portfolio manager of the Mirae Asset Asia Great Consumer Equity Fund. The title of today's podcast, The Case for Asian Consumption. Before I introduce Sol, I will give a very brief mountaintop view of who Mirai are and the Asia Great Consumer Fund itself. Founded in 1997, Mirae Asset Global Investments is the asset management arm of the Mirae Asset Financial Group, who are one of Asia's leading independent financial services companies. Their specialization is emerging markets, and as of March 31st, 2020, assets under management stood at $194 billion. Mirae Asset believes that the rise of the Asian consumer and middle class is a long-term sustainable trend that will define the region's economic growth and development across future decades. Mirae Asset launched its first consumer sector fund in 2006. Over time, as the pace of change continued unabated, it became apparent that investment opportunities could also be found outside of the traditional consumer sectors in areas such as healthcare, property, and the internet economy, where companies were also benefiting directly from increased consumption activity. Thus, the Great Consumer concept was born. The Mirae Asset Asia Great Consumer Equity Fund is UCITS compliant and managed using a fundamental, bottom-up approach that aims to identify companies with sustainable competitiveness. The portfolio managers aim to construct a concentrated portfolio of 30 to 40 stocks based on high-conviction investment ideas. Input from a network of on-the-ground research analysts play a critical role in the formation of these investment ideas. Inception of the fund was June 7th, 2011. The lead portfolio manager is Juhi An, and Sol An, who will join us today, is the co-portfolio manager. The fund is benchmark agnostic. Sol, good evening and welcome to the podcast. How are you and how is Hong Kong this evening?
Good. It's a pleasure to share our investment view or Asian consumption theme with your investors. Hong Kong, the weather is getting warmer here also, and COVID situation is also getting better. So hopefully we can get through this over as soon as possible.
So what are the economic and demographic factors that are driving the Asian consumption story? And to what extent do you think this mega trend is still in its early stages of its long-term growth trajectory?
So Asian consumption theme may sound very familiar to many investors and may feel it is a well-known story because Asian consumers indeed have emerged as the largest consumer across different consumer segments. For example, Chinese outbound tourism expenditure already outpaced that of the US as the largest spender globally in 2014, yet the amount has more than doubled since then. But more importantly, the number of passport holder in China is still hovers around 10% of total population, meaning penetration is still very low. Similarly, urbanization rate in India is only 35%. Thus, overall consumer penetration, including basic staple goods, are still very low, meaning we are still at the very early stage of this growth trajectory. So for this story, the population is really an important base. And on top of this, the robust growth of economy enabling more people to become affordable consumers in these populous countries, particularly China and India, is really the pivot of this Asian consumption theme. So this vast size of population is the reason why Asian consumer market has already become the largest in terms of revenue or market cap wise. But at the same time, it is also the reason why we are still at the very early stage of this structural growth story ahead.
Asia has the world's largest population by continent and thus a hugely diverse populace. Therefore, how does the consumption story differ region to region, country to country?
Yes, indeed, you're right that each country has a different consumption story, given each country has different economic development, different culture, different consumer behavior, different regulation, leading to different attractive investment opportunity set in each country. So, for example, we used to find more attractive Chinese consumer staples companies several years back, but along with rising affordability of middle class in China, we see more attractive opportunities in consumer discretionary or services industries compared to that of India or ASEAN, where we can still enjoy double-digit volume growth in many staples categories. So while we have been investing in Asian consumption growth for last decade, industries and companies we've been invested in has changed over time with income growth and also change in consumer behavior in each market.
In light of the pandemic, how are the recovery rates differing across the different regions and countries?
So China has been first in, first out of this COVID-19. So we're seeing consumer reaching more normalized or pre-COVID level across different consumer segment. Consumer staples have been the first industries to get recovered since middle of last year, followed by consumer discretionary in the second half of last year. And then we expect consumer services such as tourism and restaurants to get recovered in the next coming quarters. Chinese government has cleared all high, medium risk areas of COVID-19 since February this year. And so far, consumers feel generally safe and consumer confidence have been inching up. On the other hand, India is a country where we're currently carefully watching out how pandemic pans out because we recently saw the sharp spike in newly daily confirmed cases in India reaching record high. So we are actually watching carefully the situation to gauge the impact on the operation of the companies we are interested in and also we are invested in. ASEAN, I think the vaccination rate has been going up, but some countries like Philippines, similar to India, the COVID-19, the newly daily confirmed cases have been inching up, whereas Korea, for instance, we've been also seeing 600 to 700 people of daily confirmed cases. But interestingly, despite the COVID case moving up, consumer confidence has been still moving up, meaning people are now more familiar with the COVID-19 after like 1 year of experience. So generally, I think in the region overall, with the vaccination going up, the consumer confidence, apart from India and Philippines, have been generally moving up.
Particularly in light of the huge regional variations that we've been talking about, how important is active management when managing a portfolio focused on Asian consumption?
This Asian consumption theme, we think, is very different from other sectors, so difficult to be successful through investing in passive way. And I'd like to point like three major reasons why we think so. First, each country has different consumption story, as previously mentioned, because of each country has different background, different regulation, different culture, leading to different investment opportunities that are available. So another example I'd like to share is online retail. So e-commerce is actually growing fast everywhere, rapidly across the region. However, and then we have been investing in leading e-commerce companies in China for many years already. However, we don't have any exposure in e-commerce in India. Although e-commerce is also growing very fast in this country as well. And the reason is because the top two players in India is either a foreign company i.e. Amazon, or a local company, Flipkart, but also acquired by Walmart, which is also a foreign company who owns over 80% stake in this company. So what I'm trying to say is, although online retail is an attractive investment theme with robust growth across many markets, whether we can find the right company as a direct beneficiary to ride on that theme is a different story. And then second reason why we have to be active is because there is no boundary to certain sectors when it comes to beneficiary of consumption growth. Our approach is very broad concept beyond staples and discretionary products. So in the past, I think you could have just simply buy traditional consumer name, but today it is increasingly getting difficult to capture the whole consumption story through pure consumer companies. Asian consumers have been moving up so-called this adoption curve much faster than developed market consumers did in the past, probably due to globalization trend as well as fast development of technology. So, for example, in the past, a consumer who used to save money purely to buy, say, like luxury bag, for instance, today many of them want to willing to pay for more for experiences so that they can share on their Instagram or WeChat or any other third-party social network platforms. So they have become more. There have been more diversified and sophisticated needs beyond what they eat, drink, or wear. So in other words, we find more investment opportunities benefiting from this consumption growth beyond traditional consumer sectors. So for our Asia Great Consumer Fund, we invest half of our NAV in consumer staples and discretionary, but the other half invested in across different sectors such as financials, healthcare, industrials, and even materials. And third is emerging market is very big, but at the same time also very competitive. So most of global brands are already entered or continuously entering into this growing market, while we have been also seeing rising local brands who have become much more competitive in terms of product quality, marketing strategy, and more importantly, acceptance by the local consumers. So cosmetic market, as an example, it's also a very robust growth, and many brands, however, many brands come and go amid this fierce competition. So what I want to say is focusing on high quality names who can bring sustainable earnings growth is extremely important to be successful in the long term, particularly like in emerging market like in Asia. So we are constantly looking for the winners with capable management who can be smart enough to grow, to lead this massive growth from a long-term perspective, and then we just buy and hold. So we manage like concentrated portfolio with top 30 stocks with very low turnover rate.
Can you talk about some of the most exciting consumer trends that you and Juhi are seeing on the ground at the moment?
So we're seeing this rising demand of local brands in various sectors, especially in China, what we call guoqiao trend here. So young Chinese consumers have grown up amid fast economic growth in China, and thus they're very proud of their country, i.e. strong patriotism. Parent generation preferred foreign brands and products over local brands in the past, with a general perception that foreign products have better quality. And this perception has changed today, that many young consumers feel no difference whether it's local or foreign and prefer whichever with more trendy style. In addition, as you know, the escalating tensions between China and the US have, in a way, also accelerated the pace of domestic substitution. And also, lastly, the booming e-commerce platforms in China play an important role supporting the local brands' growth because, for instance, like key opinion leaders rely on Alibaba's Taobao platform, Kuaishou, or TikTok to do live streaming, to do marketing and selling products. And domestic brands have been more agile to such change and adopting the digital trend faster than their foreign competitors. Well, Asia is becoming one of the largest consumer market in the world, and more importantly, it is still very low penetration. So I think they will bring opportunities to both foreign and local brands in terms of growth opportunity. Yet I just wanted to highlight that local brands have been getting more competitive each year, which give us more interesting and attractive investment opportunities.
So, how important is ESG to you and the team when investing in the Asian consumption theme?
So ESG has been part of our investment process for many years already. So we each analyst provide a ESG scorecard for every company within our focus list or within our within the names in the portfolio. And we review this scorecard on an annual basis and also write a ESG report. And then we've been trying to keep improve this process to engage more with the management and overall improve our ESG reflected in our investment as well as our investment universe. However, so far we have not bought or sold any stocks purely based on ESG factors. Rather, it's been an important but additional factors to consider making final decision of the investment.
How significant is negative screening and exclusions to you and the team?
So we have a negative watch list, which may include tobacco companies in our investment process. However, nothing is really restricted to invest it. However, we've been considering these ESG as well as also considering overall that the consumers are considering more seriously about their health. In this portfolio, we have not been owning any tobacco or even liquor companies for this fund.
If we were to see a further deterioration in Chinese-American relations, to what extent do you think the beneficiaries of Asian consumption are insulated from economic warfare, given their more domestic orientation?
Well, we expect the tension between China and the US will continue, and thus China will continue to support domestic consumption to drive their economic growth. So Chinese government has changed their focus from quantity to quality growth to solve long-term structural issues. And the focus on, say, internal circulation, meaning to become more independent from external market, both supply and demand side, and particularly demand-wise, they want to grow domestic consumption and then reduce the reliance on the exports. Also, they've been talking about urbanization 2.0 to continue to increase the urbanization rate in the country, but more sustainable way to emphasize quality and people over speed and scale in the past. So such direction by the government, as well as strong support of local brands by consumers, will continue to support consumption growth in China.
How do you see the beneficiaries of Asian consumption behaving in a rising interest rate, inflationary environment?
Because of these inflationary concerns, we're also closely monitoring the cost pressures that our companies would have, especially staples companies in India, where costs will go up, raw material prices may go up. However, these macro trend, because the fund is focusing on bottom-up approach, and while we are looking these macro events, whether it's inflation, interest rate, we're looking at it more from its earnings impact. So we're looking at it from what would be the earnings impact wise, rather than trying to pick a stocks purely from the top-down view.
So it's been an absolute pleasure having you on the podcast. Thank you so much for taking the time to join us this evening. And we very much look forward to seeing you and bringing you to meet our investors again soon.
Thank you very much, Alexander, for giving us the opportunity to share our view on Asian consumption story today. And thank you very much for investors supporting our product in the UK, Channel Island, and Ireland. And hopefully I can travel there and meet in person after all this COVID-19 is behind. Thank you very much.